Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardez, and joining me is investment analyst Cristina Parthenido. We'll be discussing the upcoming policy decision from the Bank of Japan and the potential reaction in the yen. So Cristina, although the rally in U.S. Treasury yields has spilled over into Europe and Asia, Japan has not really taken part due to the Bank of Japan's yield curve control. Do you think policymakers will announce any changes to its current policy on Friday, since the bank will also have its first policy review since 2016?
Hi, Maria. Well, indeed, Japan's 10-year bond yield didn't rise as fast as U.S. Treasuries did because the bank's yield curve control, which is responsible to keep the 10-year yield around 0%, allowing for a small deviation to a maximum level of 4.2%. Of course, Japan's yields also managed to gain steam, although they remained restricted, rebounding back to the positive area, and that has likely affected the bank's asset purchases program because the bank needed to buy, of course, more bonds to balance the rallying yields. So, in other words, the rising yields turned more expensive than previously was for the bank, and that's why we saw some policymakers expressing their discomfort with the yield rally, which consequently raised thoughts that the central bank could allow its yields to fluctuate within a more flexible range at this policy meeting. And some others also turned cautious that the Bank of Japan's governor may remove the average annual amount of 6 trillion yen in equity purchases and leave the upper limit of 12 trillion yen in place. Well, the bank's chief has talked down that scenario a few weeks ago, so probably he will keep his words on Friday, leaving interest rates and its asset purchases unchanged for now, as the Fed did yesterday. Inflation expectations in Japan remain very weak and well below the bank's 2% target. So there is no reason actually to signal any monetary tightening at the moment. Also, the tools available for additional stimulus are very limited. So maybe the bank will not provide any further support for now either, but will likely promise to do so if the virus and economic conditions deteriorate. Probably the meeting will also be one of the most important for this year because the bank will publish its first policy review after 4 years, updating its economic projections and discussing whether the current accommodative policy is appropriate. So the vaccine rollouts may motivate some policymakers to upgrade their economic forecasts, though I don't think that this is the right time to change policy. Perhaps it's too early and we need to wait for a few months more to see how the health crisis is developing. So policy tools, I think that they will remain the same for now.
Okay, if the bank signals a more flexible approach towards its bond and equity purchases, what would that mean for the yen?
Well, a more flexible approach would mean that the bank may not need to intervene as frequently as before to stabilize the rise in the 10-year bond yield. So that could be a kind of signal of a monetary policy tightening, which could consequently mean a narrower money supply in the future and therefore a stronger currency. So in this case, the Japanese yen could show some recovery and stocks could fall because this scenario is not fully priced in, or at least this seems to be. If this, of course, was something certain, then there would be no reaction. But as I said before, the Bank of Japan will likely play it safe for now and wait for its next policy meeting when it will have more clues about how inflation is developing and how effective the vaccines are.
Cristina, thanks so much. And thanks for joining us at xm.com.